Hello everybody. First of all, Happy New Year. So today I'm kickstarting the video calls. So sorry for December, but it was difficult to implement everything because, as you can see, there are a couple of changes. But the format will be unchanged. So we'll start now with 3 topics. An update on what's happening on US 10-year bond yields. Then I will show you the chart of the stocks banks, which is of course highly correlated to bond markets. And then we'll make a focus on sentiment on US equities. So a few charts on US 10-year bond yields. So first of all, Ishimoku cloud. So on the left, monthly chart, on the right, weekly chart. As you can see here, there was a very important technical event at the end of last year on a monthly basis, because there was an upside breakout above the Ishimoku cloud, which usually define the long-term trend of the market. So right now what we are seeing is a potential long-term bullish reversal of the trend of US bond yields for the first time since almost a decade. On a weekly chart, a confirmation of the trend reversal as well. The trend change was made earlier at the end of 2016. Then a pullback on the rising Ishimoku cloud and a new upside move. So I see this overall weekly and monthly Ishimoku cloud, a confirmation of a potential very important trend reversal on bond yields. If we complete this view with MACDs and Bollinger Bands, monthly and weekly MACDs are now obviously showing buy signals, so the risk is on the upside, also according to MACDs. And there was very importantly a significant bounce from the rising monthly middle Bollinger Bands at the end of last year. So once again highlighting a risk of upside acceleration on bond yields. I will end the review of US bond markets with a point and figure chart, so long-term point and figure charts on the left. On the right, the size of the box is lower, so this is a medium-term chart. But anyway, on both charts, as you can see, the trend turned bullish last year on US bond yields. And the important event at the start of the year is that on both charts we had a double top buy signal on yields, so which means that yields are probably going higher with upside targets between 318 and even 330. Now, impact on banks. Of course, this is good news for banks. And we can see that especially on European banks, a very significant upside breakout above a major triangle formation. The target on the stocks banks is 205, but I think banks can even go higher in a medium term. Also, a significant reversal on the relative chart versus Stoxx 600. So possible start of a new outperformance period against the market. Last chart I wanted to show you is the bullish sentiment in the US. So this is the AAII survey. You can find it on Bloomberg. So very bullish start in terms of sentiment in the US, with bullish sentiment hitting its highest level since 2010, so late 2010, which is also close to the slightly above the highest level of 2014. As you can see, in both cases, the market moved slightly higher afterwards. So this is not a good indicator for a top. But anyway, as you can see, the next few months were very volatile in both cases. So it shows that the risk-reward is mixed for this year, at least for the next few months, in the US market based on this sentiment indicator. Thank you for listening, and have a nice day.